Good afternoon, everyone. This is Christy with Ahn Company. It is Friday, June 29th. I'm going to go over the markets for the day and week for you. So end of the month as well, end of the quarter as well. So a lot happening today. We had a big USDA crop report. It gave planting intentions and quarterly stocks. And really, to be honest, this report usually shakes the market a little bit. Didn't today. It was a complete dud. Didn't offer a whole lot of information. Came very close in line with expectations on all those numbers. You did get maybe borderline unfriendly numbers for both corn and wheat, as acres were a little bit higher than expectations, but they weren't drastically higher. And so it was enough to kind of let the market chew this report up, spit it out, and move on. You are back on to talking about tariffs. So you do have a lot centered around weather. You know, the weather has been good throughout the majority of the Corn Belt. There's been some areas that are getting too much rain, but as a whole, having some really great growing conditions. But the main driving force to this market right now is definitely tariffs and trade war talks. And we come into next week where you are supposed to start those tariffs here on China. And it's going to be interesting to see what happens here. You had China come out and lift some import tariffs, lower them on 5 Asian countries to get soybeans from. So you see China is starting to prep itself to get some of their goods from other places besides the United States, and that all depends on whether or not this tariff really comes around, or see if we can get a resolve from it. But for now, it looks like it is going to happen, and that's what's been really affecting this market. As a whole, when you look at the S&Ds, it's a big difference. The supply is not the story. Even if we get bumper yields, we are still coming in here and having problems growing out carry out for both wheat and corn, but it's the demand side of things. You start playing around with them. We've been running high demand, mostly off of China, been buying. That's where you could fudge some numbers and cause some increases here to carry out levels specifically into soybeans, and that's where the pressure's been coming. As a whole, though, you did be able to come up and see some support into the corn market, up 5 1/4 on the week, though. It's still down 7 cents. Soybeans up down 2 3/4 here on the day, down 36 cents on the week. Like I said, the trade war talk is definitely handling the bean market the most out of all of them. Wheat markets here, a little bit of mixed trade. We had Chicago wheat up 18, Minneapolis wheat slightly lower, Kansas City wheat up 16 cents on the week, Chicago up 6 3/4, Minneapolis down 27 3/4, and Kansas City down 18. A lot of that comes on the heels of some moisture working its way through, especially into the Dakotas. There's a little bit of a section of South Dakota that hasn't been getting the moisture, but majority of the others have been running on average to slightly above average as far as that goes. That's really beneficial to those crops. You also did get a big spring wheat planted acre number that wasn't expected, and so that was hurting the market as well. Over to the meat markets, you had some late support, midday really start to take these markets off. June live cattle struggled, but the rest of them up limit. On the week, still down, just slightly down, $127.5. Feeder cattle up $4.50 on its front. Deferreds up about $2.50 on the week, just over $2 higher. Live cattle up $1.75 on front, so it was mixed on the deferreds and up over $3 here on the week. You did have cash trade come in about 107 live, 170 dress, so that was nice to see. And then those outside markets did remain favorable all day long. Could have been where you got some support, even though the report was really a dud. Crude market was up 58 cents, dollar was down 70 cents, US Dow was down, or was up almost 200 points. Overall in the week, that remained friendly as well, with crude market up high 50. The Dow market down 200 points here on the week as you're starting to struggle with what the economy might happen with the trade war, and then US dollar about steady on the week, but that down 70 today definitely did help out these markets as well. I do have to close with a disclaimer. Trading in futures and markets involves risk of loss and is not suitable for all producers. Have a great day.